Welcome to the Companies channel, your personal handbook guide to the A to Z of the corporate landscape. Today, we're stepping into the ring for an epic showdown between two retail giants. In the blue corner, we have the wholesale heavyweight Costco. And in the red corner, it's the discount dynamo, Target. Both have their strengths, but only one will emerge victorious in today's investment showdown. Let's see who will come out on top. If you're here for the first time, don't forget to subscribe to the Companies channel for more insights into the corporate world. Now let's get this fight underway. Seconds out for round one. Round one is all about valuation, where we see if each stock is over or undervalued based on its fair price. We're using the discounted cash flow model to find out if these companies are priced just right, or if there's an opportunity for savvy investors. Costco's current price is $943, and its fair value is estimated at $967. This puts Costco at an undervaluation of 2.4%. On the other hand, Target's stock price is $149.78, with a fair value of $281.48, giving it an undervaluation of 46.8%. We're scoring this round based on how attractive each valuation is. If a stock is overvalued, then it scores nothing. If it's undervalued, and therefore good value, then it scores points depending on how much it's undervalued by. Costco scores 2 out of 10 for being slightly undervalued by 2.4%, while Target scores 5 out of 10 for being 46.8%. After round one, the score stands at Costco 2, Target 5. Round 2, the PE ratio. This metric tells us if investors are paying a premium for expected growth or if there's hidden value. Let's compare Costco and Target's PE ratios against the industry average. Costco comes in with a PE ratio of 56.8, significantly higher than the peer average of 23.4. Target's PE ratio is 15.4, which is lower than the industry average of 23.4. To score this, we look whether the PE ratio represents good value in comparison to its peers. If the PE ratio is higher than average, it scores nothing. If it's lower, then we assign a score based on the ratio in relation to the average. Based on the two ratios, Costco scores 0 out of 10 while Target scores 4. After round 2, adding up the scores, Costco now stands at 2 while Target has 9. Round 3, dividend yield. Time to see who's more generous to shareholders. Dividends can be a big deal for investors looking for income, so let's see how much each company returns. Costco offers a dividend yield of 0.5 with a payout ratio of 26%, indicating decent sustainability. Target, on the other hand, has a dividend yield of 3% and a payout ratio of 45%, which also suggests sustainability. In this round, we're looking at both the size of the yield and also the sustainability of it over time. Looking at the two measurements separately, we'll give up to 5 marks for each measurable dot. Target has the higher yield at 3% versus Costco's 0.5%, therefore we assign Target 5 out of 5 and Costco 1 out of 5. For payout ratio, the lower ratio is generally seen as better. Therefore, for this we score Costco 5 out of 5 and Target 3 out of 5, adding these up. For Costco, we get 1 plus 5 equals 6 out of 10. For Target, we get 5 plus 3 equals 8 out of 10. After round 3, with 3 rounds down, the scores are Costco 8, Target 17. Round 4, debt to equity ratio. This round tests the financial stability of our competitors. A lower ratio typically signals a more conservative approach, while a higher one shows reliance on borrowed funds. Costco has a debt to equity ratio of 25%. Target's debt to equity ratio sits at 106.6%. Lower debt to equity ratios generally mean lower risk for investors. Although higher ratios can sometimes mean increased leverage and therefore higher potential gains. Scoring the lower ratios higher, then Costco scores 9 out of 10, while Target gets 4 out of 10 in this round. With just 1 round left, Costco is at 17 and Target at 21. Final round. Forecast growth. This is where we look at the predicted earnings and revenue growth of each company. Investors love growth, so let's see who's poised to expand faster. Costco's forecasted earnings growth is projected at 8.5%, and its revenue growth is expected to be 6.2%. Target, on the other hand, has forecasted earnings growth of 5.2% and revenue growth of 2.8%. Costco has significantly higher growth forecasts based on this data than Target. This suggests stronger growth expectations for Costco. To score this round, we score each element out of 5, then sum them up at the end. Costco scores 5 out of 5 for earnings growth and 5 out of 5 for revenue growth. Total 10 out of 10. Target scores 3 out of 5 for earnings and 2 out of 5 for revenue. Total 5 out of 10. And so after the final round, the scores are Costco 27 and Target 26. It's time to crown our champion. After 5 hard-fought rounds, the winner is Costco with a final score of 27 to 26, a solid choice for investors looking for potential growth. Thanks for joining us in the ring today on the company's channel. Until next time, keep your investments sharp and your portfolios strong.